Welcome back. I'm Joe Elkjer here with Steve Rand. This is the Gold Spot. Happy New Year, Steve. We're opening up with some excitement once again. Lots of talk with the markets, geopolitically, all sorts of different things. One of the big news factors that's going to be part of the story going through the year is going to be with the Federal Reserve and interest rate cuts. They've committed to 3 cuts next year. I believe Wall Street has priced in 6. So obviously that's going to be on the agenda moving forward. How will that impact gold prices?
Well, we don't know what it'll do exactly, obviously. We can't read the future, but we can certainly look at what it's done in the past. And if you go back to what we saw back in 2008 when we went through the financial crisis, the Fed started cutting rates. And if you look at what happened from there, and they cut them aggressively several times over the next few years. And by the time you knew it, gold had gone from 800 to 1900 plus over the course of the next 3 years. So we know that there's a correlation. We know that there's a lot of precedent already been set. They're cheapening the money. They're making it so that other governments can buy gold cheaper. They're making it so that the dollar is now being devalued, and obviously that means higher gold prices. So we don't know what's going to happen, but we can certainly take a lot from that. But you got to remember that back then, we had the stock market at low levels. That's one of the reasons why they cut it, was to try to reinflate the stock market. Well, now the stock market's at nearly an all-time high once again, and they're still talking about cutting rates. That's how bad that they're anticipating things being in this economy, that they're having to do that with the market at these levels. So it really shows the desperation. They're talking about at least 3 to 6 of these, and it could be more. You could see even more of these rate cuts. So who knows what's going to happen? And all the while, the debt is just soaring.
That's kind of the big elephant in the room. Our debt just cleared the $34 trillion mark. It's not that long ago we were at the $33 trillion mark. So the debt keeps capitulating, and we're going to continue to see that with massive, it's even trickling into household debt, over 16.5 trillion, credit card debt. The dollar is so debt laden, it's going to be a very heavy burden for it.
Yeah, no question. Cost of living soaring, how kids are going to buy homes. Just the cost that it is with groceries and just the normal things that everybody has to buy right now is just increasing at such huge margins. Take a look at the link that we're going to put at the bottom of the screen. You'll see exactly what's happening with the U.S. debt and how quickly it's rising. It's pretty scary when you see it in that terms. And again, it's reality. We have to think about what that's going to mean for our future, and certainly what's going to mean for the gold price for our customers as well. Thanks for joining us. We'll see you next time on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.